Welcome to FMH Insurecast, a podcast created by Farmers Mutual Hail designed to deliver expertise and insights from trusted FMH team members and industry experts. Each new episode will dive into new products, industry updates, and innovative solutions. Let's get to today's topic.
Hello, everybody. Dave DeCap here, and welcome back to FMH Insurecast. I'm very excited today because we're talking about the latest hot topic in crop insurance this year, and that is, there are many hot topics obviously going on right now, but one of them is margin coverage option, or MCO. This product was announced earlier this year, as most of you know or have heard, and it's a new endorsement that combines the simplicity of ECO, or enhanced coverage option, with the unique capability to insure against reduced margins. We're talking about it at this time rather than earlier in the year due to the fact that as part of the OBBBA, or the reconciliation bill, several changes resulted from the passage of that bill that impacted how this coverage rolls out, among other things, which, by the way, that's a whole nother podcast, so stay tuned there. But with that said, kind of as an intro, let me bring on our guest today. First, I want to bring on Trevor Robbins. Trevor is the manager of our training team, training and education team, and then also bring on Brett Johnson. Brett is a district sales manager out of southern Minnesota. So welcome today, guys.
Thank you. Thanks. Great to be here.
All right. Hey, Trevor, let's start with you. For those of you that aren't familiar, or those listeners and viewers that aren't familiar with you, can you talk a little bit about yourself, a little bit about your background and what you're doing here with FMH?
Yeah, absolutely. So when it comes to crop insurance, been in crop insurance since 2008. Started out on the claim side and then moved into underwriting. And then now for the last, I guess, 8 or 9 years here, been in training. So our team is charged primarily with going out training our agents, but also our internal employees. And just so happens we just wrapped up our fall updates this year and have talked a lot about the topics we're going to talk about today. So definitely been a hot topic in the industry, but that's where we're kind of at as it sits right now on September 2nd. So.
Very good, very good. And thanks for mentioning that. We're recording this episode on September 2nd, hopefully to get it out here within the next few days, so you're seeing as topical information as we have. Mr. Brett Johnson, if you would, could you introduce yourself and a little bit about what you do at FMH?
Yeah, thanks for having me. A little bit about myself, southern Minnesota, lived there for the last 10 years. Been with FMH for the last 4, and 8 years prior to that, I was an agent. So seeing the agent side, now on the company side, but great to be here.
Gotcha. Yep. Great to have both of you guys. I know that your days are filled with MCO conversation, among other things. So great to have you guys here so we can kind of disseminate that knowledge out to the rest of our viewership and listenership. Well, a couple of pieces of housekeeping. This is an episode that will use some visuals. We're going to dive into MCO a little bit and talk about some of these experiences, as well as talking about what the coverage actually is and what it's composed of. So if you're listening on a podcast app, that's fantastic. Just know that if you check us out on YouTube, you'll be able to see the visuals that we're presenting. So, and the guys will do a great job talking through some of these things. So hopefully you wouldn't have to, refer back and forth. So with that said, Trevor, maybe if you can bring up the information and we can start with a little refresher of ECO, since the coverages are similar and a lot of folks probably interested in how ECO performed this year out in the countryside.
All right, so let's go ahead and jump right into enhanced coverage options. So before we talk MCO a little bit, ECO is one of those products that we want to touch on just because it has been a big player in the market here lately. Something that we talk about, because we're talking about ECO with MCO, is because they're essentially covering the same bands of coverage. So just some basics background on ECO. What we're looking at is an area band coverage for a portion of your policy. So whatever you got for individual policy, we're stacking on a little bit of area plan or county-based coverage. It's added as an endorsement to either yield protection, revenue protection, or revenue protection policies that have harvest price exclusions. So 3 options there. It is a spring sales closing date. So generally, we're talking in those 131, 228, or one of the larger ones, the March 15th sales closing date. But one thing to talk about with ECO this year is a new 80% subsidy. So with some changes here with the One Big Beautiful Act bill, we now have subsidy increases with some of these endorsements.
Yeah, and I think from the field standpoint, just to chime in real quick, from the 80% subsidy, we had a huge growth change from last year with that subsidy change. If you remember, it went from like 43 to 65. That was a significant play in the industry, both in southern Minnesota and on a national footprint. And I think 65 to 80 is just going to make that even more of a play in the spring if MCO is not the option.
All right, so just real quick on the basics. So, and again, some of you able to see this on YouTube and in the visual, but essentially what ECO is doing is creating that band coverage. So, just as an example, let's just say you were to choose the 75% or 80% individual level on your MPCI policy. ECO gives you a couple of different bands, either from the 90 to 86 or the 95 down to 86%. So you could have essentially a gap, but what it does is it's allowing you to insure some of that top end coverage on top of your individual multi-peril policy. So a couple of band options, either it's that 4% band or that extra 9% band on the top end. So when we're talking about why behind these supplemental products, some of the big key points here, lenders out there encourage those levels that are higher for protection for financing. What we're looking to do is we're giving those farmers just a little bit of extra coverage on top of that individual MPCI coverage level that they're already carrying. Because it is possible to experience an individual loss, they may not receive an ECO or MCO payment that we'll talk about here, or vice versa. But that is something to take a look at when you're applying coverage on top of that individual policy. And then, as we've discussed, that higher subsidized premium. It's more than other product endorsements. With that 80% level, definitely incentivizes more to look at ECO and MCO.
Yeah, and I just don't think we can highlight enough that new subsidy increase, how popular that will make that product. I know from us, from a standpoint, had large growth like we already highlighted from the last year. I think that growth will continue to happen, obviously, with that subsidy continue to increase. Kind of tying in those farm programs, there's a lot of encouragement to purchase these top end products for those other products or those other programs.
Yeah, that's one of the very large decisions. So you got MCO, which we're getting ready to talk about. You got ECO for the spring, and you got the increased premium discount, right? So the conversations I've heard just kind of secondhand or in agents that I've met with, kind of on a one-off basis has been there's going to be a lot of conversation here over the next few months. Well, obviously this month for MCO, but over the next few months about what the ultimate uptake of ECO is going to be, SCO, because now it's not tied to your ARC decision and that type of thing. Brett, would you say that's the same kind of conversation you're hearing?
Yeah, it's a lot of the same kind of conversations. I've heard one agents say, obviously, it's not a blanket statement for everybody, but a statement saying, "Hey, we're just deciding whether they want MCO or ECO, but 95%, 100% of my guys are going to be taking one of these area-based plans just because of how highly subsidized and how high of a level trigger there is out there for guys to get at that price point." So definitely a lot of buzz, a lot of coffee shop talk. It's just kind of going to make that decision whether MCO, ECO, SCO, which plan kind of program fits your need as an individual farmer.
Well, and ultimately that's what we're, trying to do at FMH. And, as we're talking about MPCI products, crop insurance products all together, subsidy is always a good thing. And, as far as allowing it to be more affordable for the grower. But ultimately we're looking at how much, and what we're going to be talking about here soon, are input costs, right? So we all know the marketplace gets tougher. Everything gets more expensive every year. So how are we ultimately covering that top end and maximizing our dollars at the end of the year is really one of our big reasons why we educate everybody on ECO and products like this. All right, so without any further delay, we'll go right into margin coverage options. So again, mentioned it's a new option for 2026. And so just a little bit of background. So some of you may be familiar with margin protection. So that's something that has been out for a few years, an actual policy that came out. Now in conjunction with margin protection comes MCO, but as a background with margin protection, really what we're doing here is we're providing some coverage against the unexpected decreases in our operating margin. Okay, so the end margin at the end of the year, this could be reduced county yields. This could be because of those reduction in commodity prices, increased prices of selected inputs, which again, it could be that you have those inputs costing a certain premium for you a certain dollar amount in the fall, and then come next spring or into the ensuing fall, we're looking at those increases. So it could be those or any combination of the above. The one thing to keep in mind with any of these products is we're looking at county level estimates. So it's not necessarily looking at an individual producer's input cost, but it is looking at a county level for those estimates on margin protection. So kind of the concept is we're looking at the operating margin, which is really equaling our price times our yield, and then minus our cost. This particular product is designed to transfer that risk from farmers to the market, to AIPs, and part of that being shared by RMA and the government. Assure that also that farmers have those potential losses are limited at the year end. So again, another product that's looking to be able to mitigate those losses when we're finally done and the harvest is complete and we're looking at our final margin. So essentially what we're seeing here is the remaining money that we have after harvest, after selling and paying those operating costs. That's what we're looking at with the margin. This product was built because with the belief that that's what farmers want to insure. Again, may not be an option for every farmer, but it is something to look at, and that's the concept behind it. So now we'll jump into MCO. So a little bit of background on the margin protection, but it's very, very similar in the way it works. Okay, and what you'll notice here, again, this year now, it just came about, and it does have the 80% subsidy. So we are looking at those losses that are caused by reduction in county yields or commodity prices, increased prices, or a combination of any of those perils. So where is it available? So these are the pilot expansion areas for this first year. There's going to be 12 margin protection states, and those states are going to mirror where MCO is available. So this is where, for at least for 2026, we'll be able to see MCO sold and purchased by insureds. So these are some things to kind of touch on when we're talking about payments. So I think anytime we talk about some of these endorsements, I think what we're used to talking, whether it's on the sales side or whether we're training, is those individual insurance, right? A lot of us are used to, we have our individual farms, we have those individual policies that we're looking to insure with. MCO is looking at those payments to be made when we've got those harvest margins for a county that are lower than what we've got for a set trigger margin. So essentially we're looking at, again, keep in mind this is that extra coverage above and beyond your individual policy. But we're looking at a set county number just to make it easy. We're looking at set county numbers based on our expected pricing and then also those yields. And then finally, we'll see whether or not we have an indemnity triggered when we have an area loss in the expected margin. Again, that could be a combination of any of those things, those price movements or the yields that are reducing.
Yeah, I think one thing to keep in mind too, or just to take a peek at if you're looking at either MCO, margin protection, ECO, make sure that you're getting the most up-to-date info on that county data. I know for a lot of the ECO counties or SEO counties that have been popular in my territory in the past, there was significant changes in that whatever that expected county yield is. We saw some drop 5%. We saw some raise 5% on what that expected county yield is. So just make sure whether you're looking at ECO, MCO, that you're getting that updated county information off the RMA site.
Yeah, absolutely. And that's a great segue, Brett, into the kind of the last bullet point here too, is when we're looking at expected area yields and also harvest yields. So that is something that is a little bit different than what we're used to looking at in even ECO or other endorsements. We're actually looking at what are those expected harvest costs associated with MCO to determine those indemnities. Also, something to call out here is a September 30th sales closing date, with the exception of there's some exceptions to rice and things like that. But in general, we've got a sales closing date coming up here pretty soon for this. So if we're looking at some of those corn and soybean crops where you're traditionally used to buying this in the spring, you need to be ready to start essentially looking at this and making a decision. But you'll notice here that has the same bands of coverage as ECO as well, and the same exact qualifying policies. One thing to keep in mind here is MCO can't be elected with ECO and or margin protection. The reason being is it's covering the same bands, so they're really mutually exclusive in that case. So what we're doing is, essentially making those decisions, deciding which one we're going to take, whether it be the MCO or ECO option. And Brad, this may be something that you've probably spoken to agents and insureds about when you've been talking about MCO. I know because this is really the thing that's on everybody's mind, are the input costs. So what we're looking at with MCO and margin protection are several factors when it comes to inputs. Some of the main ones that we're looking at that have fluctuation in prices are those listed, such as natural gas, okay, even diesel, potash, things like that. So those inputs that insureds are looking at, locking in pricing and getting ready to get ready for the ensuing year, those are the big pieces that are looking at and making decisions for at 9:30. Also, irrigation costs. So for those that are in irrigation country, that's something that's taken into account with MCO as well. Um, Last couple of things here is MCO does not include fixed or interest costs. So there are some of those questions that we have once in a while on those costs. Um, and then input and crop prices are determined using the same exact methods as margin protection. Okay, so we're looking at those being tracked, and we'll talk a little bit about that next. But this is probably something I know you've talked about a lot, and definitely something that we've talked about in training a lot.
Yeah, we hear a lot about the input costs. I think that's one. I think we alluded to it earlier. Is costs for these farmers are higher the years going into the 2026 years. So input costs are following suit with that. With a lot of these, they're kind of on the higher end of things. So I know we're right in the middle of price discovery for most of these input costs, and for both the this price for the commodity. Um, I think with those high prices, that's got guys looking at this like, hey, if we kind of talked about that margin movement from now into the spring or into the harvest time. So I think that there is a lot of discussion about input costs. It'll be interesting to see where these prices shake out, and then how much potential movement there is on those input costs and what that does to that policy. Historically, I think we've looked back, and MCO with the input pieces, the movements they've had from the spring price discovery to the harvest price discovery, the input costs have moved, but haven't manipulated the policy a ton, as far as a trigger for those county yields. So just something to keep an eye on, but it's not necessarily the end all be all. If input costs are high, that doesn't necessarily take margin coverage off the table.
That was a question I was going to ask a little later on in the presentation, but since you bring that up, when you have conversations with agents and insureds about what are going to be the triggers for either purchasing MCO or holding off going ECO in the spring, or those, or even going potentially MP, uh, are you seeing more driven by the commodity prices, or are you seeing it more driven by the prices, the fluctuations of inputs, or what are kind of those triggers?
Yeah, a lot of the discussion right now is trying to simplify these products, right? Margin protection and MCO have these components that, with the margin aspect, that can kind of make it a little bit more confusing, which is why we're coming out with a podcast to try and simplify this.
Right. Exactly.
But with it being a little bit of a complex policy, to try and simplify that a little bit is, we're really just the discussion is being driven around the commodity price. Is, do I want to lock in my corn soybean price right now in this pricing period, which I think we'll kind of go through, or do I think that price is going to be higher? I'm going to have a more attractive price in that February time frame. I haven't looked right off the bat. I know last week we were trading around 452 for corn and 1071-ish for beans. That's kind of those discussions is, hey, do I think I'm going to have 450 for an ECO price, or do I think I'm going to have 1070 for an ECO price on my beans? If I think that those prices are going to rally, I'm probably waiting until that ECO time frame. Obviously, we're going to go into there's more to that than just, hey, that commodity price. But I would say, to answer your question, yeah, I think it's being driven by, hey, do I think that I'm going to have a better commodity price in that February pricing period than I do now? If I do, I'll wait. If I don't, I'm going to go ahead and pull the trigger on MCO.
Yeah, absolutely. And that's a great point, Brett, when you're talking about when we're looking at those prices, as Brett mentioned, those that, today we're looking at soybeans being tracking around 1073, corn right around the 453 range. So very, very close. As he'd mentioned, the projected price and input costs are tracked during this time frame. So we started on August 15th. It'll end on the 14th of this month. And then ECO tracks from February 1st to February 28th for 2026 as we roll into next year's policy. So some things to consider when you're looking at input pricing and whether or not those fluctuations and how we look at those and maybe those whether or not they occur. Those harvest input costs, we have that question a lot in training of, well, when are we looking at those harvest prices to take into account on whether or not we do have a margin loss? That is April 1 and April 30th of the ensuing year. And then finally, the harvest prices as well will come out in October 1 through the 31st in our tracking period then. So just shortly thereafter, that close on October 31st of 2026. So something to also consider is that it's a little bit of a waiting game in margin losses because we do have to compile the data and figure out if we have had those potential losses. So something to keep in mind there. And then expected cost per acre. We won't go through every piece on this, but just to talk about all the components, I do think as Brett makes a really good point, and we want to be able to simplify it. So something that looks a little bit complex, at the end of the day, we're looking for that expected margin with all those components thrown in, obviously. But so again, we won't walk through every last bullet point of the policy to bore those folks that are listening. But
Right.
and those of you that are looking at this, we have just a couple of visual aids here. And these are just a couple of random counties, one in Adair County, Iowa, on soybeans. Those of you that can see this, we're looking at ECO payments and MCO payments. And this is just a projection. So this is what would have been had we had this policy today. So not saying that MCO wasn't around in 2016, but that just shows some historical data here. But what this really tells is, depending on where you're at in the country, it could drastically change. In these cases, Adair County soybeans in 23 and 24, we wouldn't have had any sort of ECO payment, but they would have in fact had an MCO payment. And if you go a little bit further north in Worth County, they would have been paid 100% on ECO because they had some larger losses there in the northern part of the state. And then also MCO would have been the same. And a lot of that has to do with the yield reductions. So the expected yields dropped substantially, and then also with the price changes. Specifically in 2023, margin protection was taken because the soybean price was quite a bit more at the time it was tracking in the fall prior to the spring sales closing dates. So that's why it tended to be a more popular product then as well.
Yeah, I think just kind of an interesting thing is you look at it historically, like you said, these are just two counties. So obviously each county is a little bit different. But when you look at the two counties, the MCO price on this screen shows that we had a harvest or a higher price 2 of the 10 years. The other 10 years, the ECO price was higher. But when you look at performance, they perform very, very similar still, even though we haven't had that price. So I guess that kind of reverts us back to when we're making that decision. If we're comfortable with that price, they still have historically worked very, very similar with the years that have triggered. So just once again, kind of revert back to try to simplify it is, are we comfortable with that commodity price, whatever it comes in at?
Yeah, absolutely. So just a few things just for MCO considerations to kind of round out here. Just a reminder, expected and harvest costs are considered. But that earlier sales closing date is something that you want to be aware of, is that's coming up here very soon. Again, just a little bit different than what we're used to with individual. We're looking at that profit margin that grower is trying to cover based on those fluctuation of inputs and market pricing that we talked about. And then indemnities are paid when those final county yields are available. So in the spring/summer of the following year, those are announced and then paid the next year. So those are some big things to keep in mind when you're considering MCO. And also, as Brett mentioned, probably one of the bigger ones is just looking and seeing how those prices are going to track from here on till the end of the tracking period.
Yeah, one thing to point out too, it mentions indemnities paid that final spring. Just a reminder, we're buying this in September of 25 for the 26 crop year. So that following spring is actually that June, July timeframe of 2027. So you are carrying it for quite a long time before that payment or potential payment would come.
We talk a lot, and rightfully so, about keeping this as simple as possible, understanding the details that lead up to the ultimate decision, but really trying to keep it as easy to understand and get people comfortable. This is really a question for both of you guys. What are you seeing that maybe listeners to this podcast, as far as concerns they could take away, or that you're seeing that they could learn from? You know what I mean? So if you've got some concerns or misunderstandings that are kind of, you're seeing trends of, What are those, and kind of how are you addressing those? And maybe some of the listeners can benefit from that as well.
Yeah, I think in the field, the things that we're seeing the most of is we're just a reminder when we're locking in this price or the whether we're purchasing MCO or ECO. It's a little different. It's a little reminder that it's only a 9% band. We're not locking in this price for all of our crop insurance. We still going to make our unit structure elections and our other price period for our underlying multi-peril. So really, we're just locking in that top 9 or 4% band, whichever policy we pick. So from that aspect, I think it gives a little bit of sense of relief as, hey, I'm not putting all my eggs into this fall basket. I think the other thing to just kind of think about or remind ourselves is when we look back at that historical analyzer, and it's going to be different on each county, but like we said earlier, they have historically performed fairly similar. Obviously, it's not an end all be all, but I think just working through that with your agent, finding out if it works for you, what that price is, what covers your costs, and what your outlook is for the total year, and just really trying to tailor whether it's MCO, margin protection, ECO, finding what the best risk plan is for you as an individual, and not just follow the masses. So I would say work with your agent, find what's a good price point for you, and a good product for you, and then work with that agent.
Yeah, a lot of what Brett's saying. I mean, I think that from a training side with our agencies, or whether even it's with grower groups or insureds, I think that's the biggest thing is don't get lost in all of the. We could sit here and talk calculations all day. That's not going to be any fun, right? But I think the biggest thing is differentiating it from an individual policy. Is the biggest piece of understanding what are those inputs, what are we looking at from a price and yield standpoint from my county, because they are so different. So I think that's the biggest thing is when you're purchasing this, you're looking at it is where is my ground located, and if I'm an agent, I'm talking to that individual insured to say this is kind of what we're seeing from your tracked your triggers and things like that. But really, as Brett pointed out, I think the important thing is to understand that you've still got that individual coverage. So you've still got that traditional revenue protection, yield protection, or RPHP policy to utilize for crop insurance.
Well, and I think the other thing the guys can remember too, if you like if you're interested in dipping your toes in the water with MCO, you can try it on one crop in one county. We don't have to put it on everything. So if you like the way the price is on beans and you want to try it in one of your counties, you can just try it with one and throw ECO or just your individual coverage, whatever fits you on the other county or the other crop. So you don't, like I said, don't have to put all eggs in that basket. There is some flexibility with options, whether it's this crop or this county.
Yeah, that's great feedback, guys. Thanks, because you can see how that misunderstanding, because it's a new product, you're trying to engulf the whole thing and understand everything. I can see how some of those misunderstandings can occur. One other thing that folks, especially from other areas of the country, maybe MCO isn't available in, or folks from other areas of the country it is available in, is if you had to get out your crystal ball and you're not signing on the dotted line, where do you see MCO maybe being more a part of the buying decision, whether crop wise, region wise, or otherwise?
Yeah,
Oh,
I think
you're not committed to anything that you're saying here. This is just.
I'd say for my area, right? USDA came out with a big report on the corn crop, right? It's a historically big number. Pro Farm Tour came out and said, hey, it might not be what that number is, but it's a really strong crop. Both of those numbers that I think were put out were both record crop numbers. I think the thing to remember on prices is typically big crops have big tails. So if we do come in with a north of a 180 for a national average for a corn crop, at 450, if we have a huge corn crop, I don't know that we'll have that price available still in that February pricing period. I think that's the feedback, or at least the buzz that I'm hearing around my region is, hey, if this crop, and we do have a good crop in southern Minnesota, so I think that's some of it is if this crop's as good as it is, everybody's talking about on a national level, what's that price going to do? What gives me that kind of strong outlook that I'll have 450 or a higher price in that February pricing period?
Trevor?
No, that's a great
You want
answer
to
from the
sign on the
sales
dotted
guy.
line?
So, no, I think Brett probably covered that as well. From a, again, if we don't have a crystal ball, it's tough, right? But I think with any new product, it also takes a little bit of time, right? So they've got this new product, and it's all an attempt to get more options out there for insureds, because as we look at tighter margins and we look at pricing of commodities out there. As I'd mentioned earlier, we're still the primary focus from risk management agency and AIPs like us at FMH is how do we get tools out there, how do we get products out there for insureds to be able to protect their bottom line. So definitely more to come probably on that based on just time, right, and just see how it performs in the market.
Yeah. And by the way, I totally understand what I asked was a very unfair question. There are a lot of things at play in these decisions, and there's a lot of different regions and nuances and things to consider. But thanks for playing. I appreciate that. And just kind of opinions is always helpful, especially when folks are listening to this from other areas of the country or they have a different kind of take. It just gives them a little bit more information, maybe to be smarter about this, to be able to consider a little bit more and make ultimately the right buying decision. So I'd be remiss, and I don't want to go into too much detail here because it's still in development, but private products are always a consideration and things that, okay, so MCO or what are we going to do related to that? Or what is the industry going to do? Are we going to have a load of private products on top of these? You guys want to offer any insight as to our position or what you're kind of seeing in the market?
We have a plus product suite of products that have ECO plus has been a big rider for most of the country. SCO plus has also been a play for different regions. We have come out with a margin coverage option plus, so an MCO plus. It's going to work very similar to the ECO backbone. The only difference, obviously, is we had those county inputs. Those county inputs will then be applied to the individual product as well. So it's a way to buy a county product and then also marry some optional unit individual coverage and get a bankable product with a high trigger on there. So those are all on allotment basis. So work with a sales rep if you're an FMH agent on what that would be. But yes, we will have a way to individualize this product. So it's not only just a county plan. There will be an individual component to it.
Thanks, Brett. You answered my next question as well. I was going to say our call to action there is we talk to your sales manager and we'll take those conversations individually. But I did want to at least mention the fact that there are, including with FMH, private product options out there to really kind of fold into this entire buying decision that we're talking about. So along those lines, this is for both of you. As far as kind of resources available, folks want to learn a little bit more, want to get a little more down into the weeds than we have today. What kind of options do we have out there for people to check out? Maybe start with Trevor.
Yeah, so as Brett mentioned, if you're an FMH agent, we've got regional trainers out there available to help you out with these questions, additional training, but also we've got a lot of resources on FMHA. So resources out there to not only educate you more on this product, but also be able to prepare you for those conversations with insureds. So it kind of goes hand in hand with what Brett might discuss from a sales side, but we definitely work closely with our marketing team to get you information out there from product brochures and things like that, but also kind of the nuts and bolts, so to speak, of the product itself. We have those available in training webinar recordings and also just presentations and things out there available.
Yeah, I was going to push you. Online help is a great source. It works better than Google. You can kind of go in and just search what you need, what you're looking for. It's got the webinar trainings on there as well. The other thing is in the private product, the manuals. If you're wanting to look through either the county product or the private product, to go through and read the manuals, get the nuts and bolts out. Those are always a play. And then obviously utilize your sales rep. Hopefully they've got the tools. We'll have those available for agents, but hopefully that can help generate and clear things up for agents if they've got questions.
Yeah, from our side, and then growers, producers that are listening to this, definitely stay very close with your agent. Have this conversation. There's a number of materials out there that can really help inform that discussion and come to the best decision. So, by the way, Brett, we're going to coin online help is better than Google.
Oh, that's good.
We've got exactly. So expect a marketing piece out later after that.
Sounds good. That's what it helps so quite a bit. That's where I always tell people to go first. Look first is that online help. So
absolutely. Well, anything else for the good of the cause, guys, or anything that maybe we didn't cover?
No, I don't think so. Not from my standpoint. I just appreciate being able to talk about it and get some information out there. So
yeah, appreciate you having me on, guys.
Absolutely. So, and thank you both for lending your expertise, spending a little time talking about MCO, new product out on the market. Buying decision is coming up very, very soon. So make sure you take advantage of the options and resources available out there. And about time to end our conversation today. So let me say thank you for listening. Thank you, everybody, for watching either on YouTube or listening on your favorite podcast app. Please make sure to subscribe and follow so you can catch all the episodes as they come up. And just want to thank everybody for listening and have a fantastic day.
You've been listening to FMH Insurecast. We appreciate you joining us today and would like to hear from you. If you have questions about today's topic or an idea to share for an upcoming podcast, you can contact us at fmhpodcast@fmh.com. Thanks for listening. This podcast is intended for information purposes only. See policy provisions, terms, and conditions for details. Products underwritten by Farmers Mutual Hail Insurance Company of Iowa and its affiliates, West Des Moines, Iowa. Farmers Mutual Hail is an equal opportunity provider.